On Wednesday, February 26th, that's when Nvidia will report their latest quarterly figures. Now, it's always a big earnings report. Lots of people think that this is a market mover, although with all the big tech companies already reporting, with all of them already revealing their Capex plans for the year, I don't really think it should be such a big deal. But okay, my prediction is Nvidia stock goes up after the earnings report, and I'll explain throughout this video why. I'll explain also what you need to know, what the analysts are expecting. There was also a report coming out during the weekend talking about, well, maybe Microsoft is pulling back a lot of investments that might hurt AI demand. We'll talk about all of that in this video. Right now, if you look at Nvidia stock year to date, it's basically flat. Year on year, the stock is still up over 90%. It has a market cap of over $3.2 trillion and a forward PE of 34.2 times. Now we're going to dive a little bit deeper in just a second. If you enjoy this type of videos, hit all the buttons, would really appreciate it. We're also going to dive a little bit deeper on Tuesday in the live stream with Jose that we always do on Tuesday and Thursday. So of course, stay tuned for all of that. And if you want to support me even further, do check out the link down in the description and in the pinned comment for the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Now let's first start with the average analyst price target before the earnings report comes out. That still sits 28% higher than the price we're at right now. The average price target sits at $172. If we look at what the market is expecting Nvidia to report, they expect revenue to come in at $38.15 billion, EBITDA of $24.17 billion, EBIT of $24.54 billion. These are, by the way, quarter over quarter growth rates. EPS on a GAAP basis of 80 cents and on a non-GAAP basis of 85 cents. I mean, for a company of Nvidia's size to still manage to grow this quickly for sales, then if we look at EPS GAAP, I mean, this is just incredible. Incredible. There are smaller companies that are not even growing this quickly, top and bottom lines. As for some pricing metrics, forward PE, EV to EBITDA, price to sales, price to free cash flow, you can see that all of them but price to sales are still below the 5-year mean, despite Nvidia stock being up 10x since, well, the lows in 2022. It's just incredible. If you look at price earnings to growth, still under 1, which by definition should mean that it's undervalued. If we go back and look at what has happened last quarter, we can see beats across the board, despite also some noise going into that earnings report. Beats across the board, no problem, even guidance was fine. A small miss here of 37 basis points when it comes to operating margin, but really not that big of a deal. Now, during the weekend, if you've been on social media, you might have seen this note by TD Cowen. They said the following: channel checks indicate US data center lease cancellations by Microsoft. Our channel checks indicate that Microsoft has 1. Canceled leases in the United States totaling a couple of hundreds megawatts with at least 2 private data center operators. 2. It has pulled back on conversion of SOQs to leases. And 3. Has reallocated a considerable portion of its international spend to the US. When coupled with our prior channel checks, it points to a potential oversupply position for Microsoft, which of course throughout the weekend everybody saying, oh, AI demand has peaked, it's all coming down, blah, blah, blah. Well, luckily, Microsoft, Amazon, Meta, Google, all of those companies already reported. They've all, well, told us what their Capex plans are going to be for 2025. Now, we're also lucky that we already have a counter argument here. So Microsoft has already refuted those claims. They told some analysts the following: Microsoft are strongly refuting any change to their data center strategy. They make investments based on a 10-year view on demand for cloud and AI demand. They tweak their forecast up and down on this over time on a regional basis depending on which regions need to be prioritized. Microsoft says they have already invested heavily in data center in the last few years, and on their recent call, they guided for Capex growth to slow year over year from the 50 to 60% range, but this is of a high base and is still growing strongly, which we can see right here, right? This to me does not indicate an end of the demand, of the AI story. No, not at all. Plus, if we go back to, well, the 4 big tech companies that told us what their Capex plans are for the year, Well, those are over $315 billion worth. Amazon around $100 billion, Alphabet around $75 billion, Microsoft around $80 billion, and Meta around $60 to $65 billion. And of course, we know that a lot of that will go to Nvidia, since Nvidia does have a majority, or a large majority of the market share when it comes to GPUs, AI accelerators, and all of that. But of course, not all of the $100 billion will go to Nvidia. No, a lot of it will go to infrastructure, build out of the data centers, and all of that. But this, again, does not indicate any real slowdown or stop in growth or less AI demand. If we go back to the last Microsoft earnings call, they said the following. In Q3, we are working from a pretty constrained capacity place, and this was our expectations to be in that position last October when we talked to you all. And when I talk about being capacity constrained, it takes two things. You have to have space, which I generally call long-lived assets. That's the infrastructure and the land, and then you have to have kits. We're continuing, and you have seen that why our spend has pivoted this way to be in the long-lived investments. We have been short power and space, and so as you see those investments land that we've made over the past 3 years, we get closer to that balance by the end of the year. We also have Meta that talked about the hundreds of billions of dollars that they will invest in AI infrastructure over the long term. They also announced last week, well, a couple of weeks ago, that they expect to bring online almost a gigawatt of capacity this year, and they're building a 2 gigawatt and potentially bigger AI data center that is so big that it will cover a significant part of Manhattan if it were placed there. More recently, we also had this headline here from a Taiwanese newspaper. Nvidia is securing 70% of TSMC's advanced packaging capacity for 2025. Why do they do that? Well, according to this unnamed industry source, they saw an increase in demand for Nvidia's Blackwell AI chip. So again, everything points to a beat and a raise for Nvidia. What we've also seen is this. HPE, for example, has already shipped its first Nvidia Blackwell-based system, the Nvidia GB200 NVL72. That has 72 Nvidia Blackwell GPUs and 36 Nvidia Grace CPUs interconnected via Nvidia NVLink up to 13.5 terabyte of HBM3E memory. Of course, I'd like to know more about the, memory business, since I am a Micron shareholder, so maybe they can touch on that during the earnings call. But this, by the way, will affect Nvidia in the upcoming quarter, not the one that they're going to report on Wednesday. But during the call, I also want to hear maybe a bit more about the China issues, maybe Singapore as well, right? Because I mean, if Singapore, if that's really 20% of Nvidia's revenue, why aren't we seeing anything come out of Singapore, right? Why aren't we seeing a DeepSeek or ChatGPT or something robotics come out of Singapore if you are buying so much from Nvidia? What's going on there? Of course, you might know what's going on. It's basically going to Singapore, and then from Singapore it lands and goes to China. So yeah, maybe we'll hear a bit more about that during the earnings call. What we've also heard a couple of weeks ago at the start of February from Google, Blackwell is here. So they have the new Nvidia Blackwell GPUs that are available on Google Cloud. So again, I think there is just a lot of demand. And if we go and actually go back to the comments that were made by Nvidia 3 months ago, they said the following: Blackwell demand is staggering. Demand exceeds supplies for several quarters. In Q3 alone, they sent 13,000 samples. They were in full production and will deliver more Blackwell than anticipated in Q4. With regards to the H200, they are experiencing the fastest growth and ramp in history. Then with regards to margin, they expect low 70% margin at the start of 2025, but that should go back to around 75% at the end of the year. So all of these comments, everything that I'm reading and seeing here indicate to me that Nvidia beats and raises on Wednesday, and the stock, in my opinion, that's just a prediction, the stock will go higher. Looking at Nvidia stock right now, we can see that, it has been respecting that 200-day moving average for quite a long time. We were quite close here August of last year, didn't really go under that, but we did go under it during that DeepSeek drama, right? We did go under it, but a quick rebound. We actually closed last week above the 50 and the 20-day moving average RSI is also quite neutral. So yeah, we'll see what happens. Of course, macro can play a part in the next couple of days, as we've seen on Friday, but my prediction still stands. On Wednesday, after they report earnings, after the earnings call, I think the stock goes up. And so there is that. Of course, I'll correct myself if I was wrong in the earnings preview, but those are my expectations. I expect a clean beat across the board and then a beat for guidance as well, which probably means that they're going to raise guidance. So that's about it. Do share your thoughts and expectations down in the comment section below. This is the second time I'm recording this video because the first time the video was already done, the sound for some reason got completely distorted. So I had to start again. So if you're still watching, let me know in the comment section below. Hit all the buttons and I'll see you all in the next one. Bye-bye.